A couple weeks ago, during a Real Estate Real Talk, we talked about the growing popularity of mortgage rate buy-downs. But there's another option that's kind of gaining some traction. It's called home equity loans. Now, according to a Meridian Link survey of 1,000 people, 21% said that they were likely to take out one in the next 12 months, but only 52% had a strong understanding of what the home equity lending process is like. So joining me right now to explain what it is and why maybe you might want to consider one, Los Angeles real estate agent Keri White. Hey, Keri.
Good morning.
All right, so the obvious question that we're going to start with here for the people out there is, what are home equity loans?
Right, yes, and it's common for people not to really understand what exactly these are, but a HELOC, as they're referred to, is a home equity line of credit, and it's kind of like using your house as, say, an ATM machine. It's different from the cash out refi. When you refinance, you take that portion of cash in your home and you put it all into one new loan, and then you have a new interest rate. So because people have such incredible rates right now, they're opting to do a HELOC instead, which is just pulling cash out of their house, and they pay a different rate on that than they do their own regular mortgage.
Okay, so now we understand how they work, what they are, but can you explain exactly how they work?
Yeah, and similar to what they are, taking cash out of your home, what you're doing is you're borrowing against the available equity. With this rise in equity in home ownership, people now are sitting on tons of cash, I guess you can say, but they can't really tap into it. So with the HELOC, you're able to get that cash and use it as collateral for a line of credit. As you repay your outstanding balance, the available credit is then replenished, much like a credit card. So instead of refinancing your entire loan, which means changing your rate and getting cash out, you're actually just taking that money and setting it aside, separate from what you would in your own regular mortgage. So you have two payments essentially.
Okay, so Keri, can you talk about what people maybe should consider before opting for a home equity line of credit?
Yeah, well, do you need it? And I was just talking to an agent who was writing an offer on one of my listings, and he said that his client pulled out $1 million in a HELOC that cost him $20,000 a year as an emergency fund. So in order to get money out of your house, you have to qualify for it. So you have to have at least 15% or 85% available equity in the home. So your home has to be worth more than what you're trying to get out. And they have strict guidelines too. They look at your income. They act like you're getting another loan. So they're going to look at your debt to income ratios, your income. So say you do lose a job, you're already sitting on that cash as a rainy day fund. But you have to consider from an economic slowdown point of view, these HELOCs will be a lot harder to get and a lot harder to access. So make sure that you're informed, speaking to your financial advisor, see why you need this, look at how much more it's going to cost you every single month.
Now, when you're seeking one, is this something that you can get from any bank, or only certain ones offer this?
Everybody can do it. I mean, right now, the cold calls for people trying to offer HELOCs and even business loans, I mean, any of the spam calls you're getting is probably something to do with the HELOC. But yeah, almost every single bank can do it. So shop around and see who has the best options for you on the HELOC.
Solid advice there. Do you think this is going to be a popular option throughout the year?
I do. There's this phrase called golden handcuffs. I'm not sure if you've heard that, but they're saying that homeowners right now, they feel like they're handcuffed to their current property because they have such an incredible rate, like a 3%. And those rates are really never going to come back again. So for them to move and give up that 3% rate usually means they'll be in something in 4.5, 5, 5.5. So the option to pull out money, rent your home, and use that money as a down payment on a new home is going to become extremely popular. So it's exciting to have these options, really.
Yeah, it's something else, that we've talked about here for potential buyers out there to think about in this process. Thanks so much for that today, Keri. We appreciate it.
Of course.
Tune in every Wednesday for more real estate real talk and real estate advice from Keri. And in the meantime, follow her on Instagram at Keri Ann. Subscribe to her YouTube channel. Make sure you guys are going to check this out, Keri White Real Estate.